Hello everybody, this is Bulldozer Investing. Today's February 26, 2021. It is 4:27 p.m. End of week, it's Friday, so let's go ahead and analyze what happened at the markets. Interesting week, painful for a lot of people, so I'm going to try to make my analysis for the VIX and the ETFs of SPY, QQQ, Diamonds, and IWM. Very precise so that everybody knows what's going on in the charts technically. Let's start with, so first thing first, I'm going to go ahead and start with VIX. Looking at this chart, let me go ahead and fix, yep, there you go. Looking at this chart, this could be a possible bottom. Now, the cloud top, and I've told you guys the other day, I think 3 or 4 days ago, that when we were here, and I said that I could see the top around 30s. 2830s, something like that, right? We hit that. Now, what is more interesting is that we have to see the previous spike, right? We had 64% spike, a down, up, and then it crashed down. So again, what will happen is we might start Monday with a down day and reach the previous highs of VIX and then slowly melt down. Last time, what happened was it got a support. Let's see. No, it didn't get really a support, but this time it did get a support near the cloud bottom. Looking at VIX on the daily, it's kind of puzzling in a bit. I'm going to go into a shorter time frame. So as long as VIX doesn't break out of here, then we're fine. But if it breaks out, you're looking at VIX going to 38. That's on the daily. Now the moving day averages and everything is now in a bullish crossover. Stochastics look bullish, and then let's go ahead and fix this. Okay. On the MACD side of things, let's go ahead and take a look at MACD on a zoomed out level. MACD has a bullish divergence or bullish crossover. Stochastics bullish, RSI bullish. The fact that the moving day averages are on a crossover on the daily for VIX, everything looks bullish. But this is the thing: the story could change any second if VIX doesn't, if VIX is not able to basically break out of this trend line. And this cloud top is going to be resistance, and this cloud top is going to be resistance. So 30, 26, and 29 areas are going to be resistance for VIX. Let's hope that it crushes down so everybody recovers. Next up is SPY. So let's take a look at SPY. Let's zoom in. Now I kind of changed my chart a little bit. I thought this was the bottom, so I did double bottom here, but it went down. And look at the precision on this one, 50%. So the first, I don't know what I did. Maybe I missed a couple points here and there, but like it broke down a bit under the 61.8, then picked up. Now it kind of tested the 50% fib and closed above the 50-day moving average, which was very important. But again, the moving day averages are doing a bearish crossover. Let's take a look at the MACD. MACD here is again turning into a bearish state. Let's look at stochastics, again bearish, and then RSI is of course bearish. This is the daily time frame, by the way. Now let's look at it in an overall trend, and we're going to look at it in a weekly situation because we have to see the weekly candles. This could be a possible double bottom reversal, or Monday we could dip and get a cloud bounce just like here, because as you can see, let me see if this day was Monday, the 29th of January. 29th of January was Friday. So if, and this is a very coincidental thing, is today is the last trading day of February. Okay. So Monday will be April 1st, or March 1st, I'm sorry, March 1st. So I hope to see that recovery. So last January, end of January for the last trading day. If that's the case, let's take a look. Yeah, the 29th was the last trading day of January, which was a bad month. And then bam, The whole month of January we went up. So then again, it was a bad month. End of February, it was basically bad for everybody. And then we don't know if we're gonna go move back up to 402 or 404. That's my topping. Like, I think that's where the market will most likely top out. That's what I'm guessing. But in the near future, what the Fibonacci is telling me, where is this Fibonacci coming from? Over the previous double bottom area. So let's delete that. Okay. Let's keep the current one. So what I'm seeing here is that we will most likely test 391 and 394. But 394 is very critical for the market because that's 394.17 is the previous top. Now we could break out of the previous top and reach all the way to 394.41, which is a couple cents above. But it is very, very important for the markets to break above the 61.8. If we don't, then we would possibly see a rounding top, which is very dangerous when all the moving day averages are also doing a bearish crossover. So we need to fix that crossover and move as fast as we can and try to maintain above 394. If 394 cannot be broken in a week or so, then that's going to be a big trouble. That's when, things are going to go down the hill. So a lot of people, I don't like to call the market top or anything, and 394 might not be a market top, but it will surely be a short-term boundary for market correction. So one more promise that I made previously was that we're going to look at the the weekly chart. So let's take a look at the weekly chart. Rising selling volume on the weekly, as you can see, regularly. So for the past, and this was the last time we passed that. So last time was June 8th, which is my sister's birthday. Okay, so June 8th was the last time we actually had a sell volume as much as this. I mean, not as much, but pretty close to it. So we'll see the reaction. So last time it went in the cloud and bounced back off of the weekly 9-day moving average. This time, the end of week, we ended below the 9-day moving average. Now, last time we did that was January, last week of January, and we bounced harder. Now, this is a question that I have in my mind, is that we're coming to a rising wedge on a weekly chart, and that rising wedge, we finished right in the edge or below it. Now, if we see another down week, I could possibly see a flooring, right? And this is where I'm going to draw this top right here and this bottom right here. Okay, so I could see a possible flooring on a weekly to 370 or maybe 368. Now, reason why I'm saying that is because this rising wedge is broken down, and then plus we're underneath the 9-day moving average, and the closest moving average is the 20-day moving average sitting at 368. And then I see a bottom of this candle right here, and you see this top resistance 1, 2, 3. Okay, so this is gonna be your next level. Now, where would I see the next level is actually the body of these two candles. The top of this candle and the bottom of this candle coincides. Okay, so that looks like a good, flooring right here. And I actually want to do this. Yeah, this is so from this the weekly chart, this double bottom is showing us that we have gotten a support, perfect support right here. Okay. Let me see how correct I am with this though. I just did it like, I didn't. So what is the bottom of this candle? 322.66. There you go. Yeah, perfect, guys. And again, I don't really like, I'm not an expert or anything, don't get me wrong, but I mean, if you look at charts, you know that this is a double bottom, and after this double bottom correction and where the bottom of this wedge is, basically everything took off, right? So if you look here, the market could top at 412 according to this extension. It's just all possibilities here, right? We can't predict the future, but we can just make educational guesses. So over here, where did we close, or where was our lowest on the weekly candle, is where it ended up as being 161.8 golden ratio at 378.18. Did we actually touch 378.18 this week? Guys, my memory short. I didn't watch the market yesterday. Took off because I was doing flooring on my basement. I was renovating my basement, took out the carpet and bought vinyl tiles or vinyl planks. So I kind of couldn't watch the market. It was a nightmare anyways. Good thing I missed it. But I honestly didn't know we hit 378. So let's take a look at the hourly candles. Holy crap. We did, and it's not a joke. Wow. And look at the perfection. Where did I draw this on a weekly chart, right? It was like way back. And look at the precision. Okay, look at the precision. So we don't know if this is going to hold. The 378 better hold, and I wasn't basically, it's not a surprise that this was a technical bounce. Now, I mean, looking back at the weekly chart, I have to fix the time range now. So looking back at the weekly chart, and let's go ahead and zoom in more. And this was an obvious double bottom, and the bullish run started after that, basically after where I drew this red line, right? You see this red line where I drew it? Basically, as soon as we broke above it and then came back and got a support, and then bam, right? We had that bullish run. Now, we don't know if this 161.8 is going to be a support, which is 378. Because if it doesn't, then it's going to come down and try to meet the 20-day moving average, or maybe a sink below a little bit, and maybe meet the bottom of this candle, which is sitting at 364. God forbid, that's going to be a huge candle, and a lot of people are going to be scared. I hope that doesn't happen, but if it does, I wouldn't be surprised technically. But the only thing that's giving me hope right now is this 161.8 extension, which is sitting at 378.18. And which seems to be very precise, calling the bottom of the bottom of today, basically the lowest point of today. So we'll see how that works out, guys. My goal right now is 391, 394, but we better break above 394.41, not the previous high. Usually what you'll do is spike a little higher from the previous high and then crash down. Okay, so we don't want that. We want to maintain a nice base around 394 on SPY. Okay, so that's all my analysis for SPY. So next up is QQQ. Now, one thing I'm going to say is that if you skip SPY review, just go ahead and quickly review SPY, because usually, if you're worrying about the market, SPY would be a better mix of, ETF than QQQ, because QQQ is projecting just the tech sector. Now, huge. This is the weekly chart, by the way. Huge sell volume. Okay, no doubt about it. Look at the average, like averages around right here, like 200. This is the weekly though, 239 million. Or that would be no, that would be like, I don't know. This says is millions. So I would say weekly average would be 209 million, about 210 around there. And we had doubled the average on the sell side on the weekly. Last time we've seen that. So you see the average around 219, and last time we doubled it, we saw that, correction for coronavirus. I hope we're not doing that at this stage looking at QQQ. Now, SPY didn't tell me something like that, right? SPY, we did the double bottom here, and we'll do it here as well. We did this extension, right? From this bottom, this top, and this bottom right here. SPY managed to hold the 161.8 extension. Now, what happened with QQQ is a totally different story. It acted as a resistance. And this 161.8 extension from this double bottom, oddly enough, meets perfectly from this double bottom on the 61.8. So the 100% difference, but it meets up exactly. They're colliding, right? Look at this. They're colliding together. These are two different Fibonacci lines, okay? Acted as a resistance. It looks like a megaphone. I probably drew this megaphone on a daily chart. We'll take a look at it, but that megaphone doesn't look right on the weekly chart, so I'm going to delete it. Worst comes to worst, I think QQQ can drop and get a support at 307, which is the 20-day. It'll act like a magnet if we see further dropping. Moving day averages are not affected on the weekly for QQQ, which is a good thing. And MACD will zoom in. MACD is way, on the bullish side, but I don't like this sell volume. Okay. It's either margin calls kicking in, or it's either that spike in GameStop that happened, and I don't know, it forced again institutions to sell to cover up. I don't know what the deal is, but I think 307 is a given for QQQ, and then let's see that bounce. And as I've told you guys many times that I love buying stocks at the bottom of the channel. When a lot of people ask me, is this technically good? And they're showing me charts on top of the channel, which I don't like. I like buying things off the bottom. Now it might be scary. Sometimes it drops off the bottom, and that scary motion could be that 100% Fibonacci, which is 303. So we break down 307. Don't get scared. 303 should bounce to the upside. Okay. So that's QQQ on the weekly. Let's take a look at the daily. On the daily, we're seeing a different picture because we're at the oversold territory. RSI is turning around. MACD and stochastics definitely need more time, I think. The next week, we're probably going to see, a little more coupled down days, or maybe a slow recovery that would fix up the MACD technically in the stochastics until we see that, crossover on the internals. We can't really say that recovery is coming. However, the 9-day crossed over the 20 on the downside, and then it's moving fastly, so this looks bearish. This looks bearish. MACD, stochastics looks bearish. RSI is at oversold, so we could maybe build position. But the bottom of the channel, as we said, was 307, which was meeting up with the weekly 20-day moving average, and then we're seeing 304 on the daily. That's where the 100-day moving average is. And that's where the cloud bottom is. So I'm assuming that most likely we'll probably hit 303 in the beginning, maybe Monday. We'll see like a huge panic sell again and then recover. My goal for QQQ is 350 or even higher at 360s. But then again, we have to see a rounding bottom and a recovery off of the bottom of the cloud. And again, these are ETFs, so they move, they don't move like GameStop. So the recovery could take 2-3 months. We'll see. We'll watch that carefully. Next up is Dow, so DIA. Dow kept, and as I told you that, it looked promising, but then we hit the 161 extension, and I said it needs to break above it, or else we're going to see a nasty reversal. So I've told you that, all your cruises, airlines, all the banks, they're going to get stuffed. So it basically, people took profits from it and they sold it. Now the 50, I'm sorry, I said 100. The 50 has acted as a support, the 50-day moving average on the daily, which is good. It finished on the 50% Fibonacci extension to the downside that we drew, which is good. Moving averages are going a little bit bearish, but it's okay. Those little curls can change instantly. But then again, your MACD, stochastics, and everything else looks bearish, which is not good. As you can see, we see this red bar already forming. I hope that reverses soon. But this is the thing. Tech has been beaten down, and Dow has been running up. By the way, Dow at above 30K, which is still good. I mean, 30K a year ago was a dream. I remember Trump was, or whoever it was, like during Trump administration, 30K Dow, 30K hats were getting printed. We hit 320, 32K. Give or take, right? I have to do some math, but give or take 32K. So we're not at bad times. It's just that people are afraid because they've been winning, and they're not seeing, they're not getting used to seeing, losses like this. While you look at it here, Dow has been underperforming the whole entire January, and now it picked up. So my guess is that if Dow falls, it'll probably fall down to 307. So that's like a cloud top bounce. Worst case scenario will be the cloud bottom at 301. 300 seems like a good psychological level, which is where the 100-day moving average is. Let's take a look at it weekly. I'm going to delete all of this, okay? This can stay. This is good. Where we can see an obvious floor on the weekly at least is the top of these candles and the bottom of these candles right here, right? So that's going to be a good support, which is near the 20-day moving average on the weekly, sitting around 300. I said give or take the psychological number if Dow crashes. So it held the 9-day, which is good. But if it can't hold the 9-day moving average on the weekly, it'll definitely get back to 30K. That's the psychological number. Worst comes to worst, pre-corona crash. Dow was lagging for a long time because if you look at it, QQQ and everything is well above previous corona crash. Dow obviously got hurt the most out of the corona crash. It's not that much above the previous tops from last year. So let's take a look at this. Let's do this double. I don't even know if I can do a double bottom because I don't see it. So all I can say is this. This is the way I see it. First drop is going to happen at 303, 304. If it comes down, it could revisit that psychological 300 levels. Okay. However, if it holds the 90 moving average, we can see it moving on a bullish run because, again, your airlines, your cruises, all the energy stocks has not been up yet. Again, they're not that much higher than and some of them are still down from corona crash. So I wouldn't be totally surprised to see a bullish run on Dow the next couple of weeks or months, given the fact that they were the hurt most, and we are as close to coming off from the stay home thing, um, then Dow will be obviously should be moving up and the tech should be coming down, and that's what's happening. Okay. Next up is Russell. So again, if you haven't watched my previous reviews for SPY, QQQ, and Dow, I think it's worth a while to watch and understand what's going on in the market. That's why I took a lot of time this video to explain what's going on in the market by reviewing all the ETFs, right? So before, I highly suggest to review all the ETFs and try to understand what's going on in the market. I see a possible 9-day moving average support on the weekly. That's number one for sure. But it managed to fit in, go back inside the channel that we drew, which is also a good thing. But Russell probably, and Russell should have gotten hurt the most. And remember when we were here, I said that even though it looks like it wants to break out of this channel, I don't like buying things on the channel top. It would be possible, and it would be very bullish to see Russell going down and getting a support from the bottom of the channel. My predictions on Russell has not changed. I'm predicting 240 to 243. When I say Russell, the ETF, the iShares, okay? Now let's go to daily analysis. On the daily, we see a better picture of what's going on. You see this? The channel, we closed right on it. The moving day averages are still, trying to, it's moving as it's resistance at for sure the 20-day moving average, but if we try to stay above this channel, if we manage to, definitely Russell is going towards 228 to 231. If we lose this channel and this 9-day moving average is going to act as a resistance, we're going to visit the 20-day at 211 and most likely the cloud top at 208. Now, if you had asked me a couple of weeks ago if we can visit the cloud top, I've had the idea of visiting, and I love this bounce, right? We actually, when we were at 230, I said, yes, it's going to 240, but I don't like buying things above the channel. And if it was a good entry point, I would have entered at the bottom of the channel. Now, did it happen? It happened. It bounced, but then it got a double bottom and it actually closed. The thing is, we went below the previous low. So previous low as in a couple days ago. So that's not a good thing. And the chart kind of looks like it wants to touch the 20-day or the 50-day, I'm sorry, sitting around at 210. And if we break below that, I can say that we're probably going to get a very nice support at 208, which seems to be the extension that we drew and right on the cloud top. And those, when you have a moving day average extension and the cloud top meeting at one place, it's going to be a strong support. Okay. If you break below that, then it's bearish. Now, if you tell me I see a possible head and shoulder, I don't really think this looks like a head and shoulder. I'll try to tell you what it is, right? You might tell me like this looks like a head and shoulder. I don't see it. Head and shoulder, first of all, you're above the cloud, right? That's safe. Second, you're at all-time highs. And head and shoulder looks more like this. It won't look, so you're going to say what's the difference is because it's on a bullish run, comes out, gets a support from the bottom of the channel, goes to a bullish run again, gets a support, goes to a run, gets a support. So this doesn't, this story right here doesn't look like a head and shoulder. Now, if it was something like this, yes, okay. You're actually coming off the top and going like this. Could it possibly, yeah, if you break below here, which I've literally said, if you break below the cloud or below the top of the cloud, then yeah, it looks bearish. But I don't know if I would call this a head and shoulder. You can. I mean, you can go ahead and do that. But again, I'm just showing you that it could possibly be called. But again, it's on a bullish run. I don't know. It would be a weak head and shoulders. So that's my review on IWM Russell. We're going to go ahead and quickly cover up with the requests. Now, Apple, I'm going to try to be quick with all the names because we spent so much time analyzing the market. Now, on the individual names, I'm going to try to be very, fast as possible so I take minimum amount of time. We're at the very edge of breaking out on Apple. Now you're going to say, how are you breaking out? You're at the bottom of the cloud. Moving day averages look like crap. All your stochastics, MACD, RSI is crap. Now you buy low, sell high. That's the story. Where have you seen? Look at this. Resistance, 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 support, support. So this critical area, I'm going to go ahead and color it. This is your critical area. Now, if Apple gets a support again at 118, look at this beautiful touch, right? Look at this precision. Touched, bam. Tried the top of the cloud, got a 100-day moving average rejection, which is this red line right here. Bam. And all your moving day averages look bearish. What I'm telling you is that, what I have been telling you, remember we were up here. I said be very careful. I said Apple will probably not go too much high. This top right here, the right after the split, is going to be your major resistance. And look here, rejection. Look here, false breakout, rejection, 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 so many times, right? And I said I don't see Apple breaking it anytime soon, although I'm long-term bullish on it. I've explained it. I said that to be bearish or think bearish about Apple is un-American. And I explained the reasons, right? So here, what I say is that when and if if we get a bounce here and we maintain this level, worst comes to worst, maintain this bottom of the box, then you're probably going to see a reversal off of the MACD and a breakout above the stochastics. We drew the trend line, right? And then the RSI will probably twist back from the oversold territories, and there you have it, a recovery of Apple. Now, what will probably happen is we're going to see a couple more tries on the cloud top or the moving day averages and slowly come down to this box and this, Fibonacci level, and then that's where you buy Apple. And I've been warning people. I said, yes, I'm bullish on Apple, but to this week, this month is not the right time for entry. And I've said that you can go back and look at my videos. However, by the summertime, now this will be invalidated if this yellow box doesn't hold. But if it does hold and we see a reversal, my projection on Apple is that we're going to see 184, 180 these levels. Okay. That's my projection. Now let's take a look at the weekly, right? Now, why does it make sense better now? Let's delete this trend. Yeah, look, if you look at it, MACD is on a bullish run on a weekly, but the thing is, it's always been for the last couple of months red bars, couple of green bars, and we're still at red. Stochastics is dying off, RSI is dying off, right? So what I'm thinking here is that we might see a couple of downs, ups, and look where I drew this box, right? Let's make this box a little bigger and let it touch the cloud. Okay. Now there you see at the end of the wedge, and you break out of the wedge and you start your run. And where do you start your run? You see this top. Apple has not touched this trend line yet. And as long as Apple doesn't touch that trend line, I don't think the market is topping out. What you're going to look for is that you better break this level right here, basically the 161.8, 144, which is the previous top. Break above it, then you touch this trend line. So 180s. As Apple, and if Apple goes to 180, I think that's where the market will truly top out. Because you see this correlation on the weekly. Yeah, Apple has been going down, but yeah, the volume has been going down. Besides this week, this couple of weeks, one, that's 1 week, and two, that's the second week that the volume has been trying to, get over it. But I think slowly what will happen is it'll go within this wedge and then break out. So give or take, we're looking at another month for Apple, and then by the time it's spring, we'll see Apple moving up. Okay, so that's my analysis on Apple. Next up is Boeing. I don't mind looking at Boeing on a weekly chart first. And I've been right on Boeing a couple of times, and look where my projection was off of this ABC, so ABC, right? Off of this bounce, look at where I predicted basically the gap fill anyway, so it's not like very hard to predict. So what will happen in the future though? Where do I see Boeing going? I like this breakout of this trend right here. So let me take a picture of it and I'll tell you the possible scenarios, okay? And again, these are going to be all scenario based. When we go to daily, I'm going to tell you what's going to go on. Yeah, we see some buying as we saw buying here, right? But look, light volume, light selling here, and you're basically doing a wedge and you break out of the wedge, okay? Now, possible upside for Boeing will be $236. And once in the 9-day moving average on the weekly has been a support. So I see this going towards the top of the cloud, the previous gap right here, right? The previous top. It could. But before it does, the 9-day right here has to hold. If it doesn't, it's going to try to go back to 50, which is 202. Okay? I like the green cloud forming on the weekly. Remember, this is a weekly chart. But then again, this level right here is going to be very important. So you might break above and test the top of this box and then come back. That would be a very possible scenario. Again, we're discussing scenarios. Another scenario could be that you break out of the box and you meet the 100-day moving average on the weekly and then come down, which is basically the bottom of this, basically the closing of that week of the candle is meeting the 100% FIB. You see? Okay. Now let's go back to the daily chart. and discuss the near future. As we said, the 9-day moving average was holding on the weekly. Now the cloud top is holding, and also all the moving day averages are meeting up and holding the price. But when, certain sector goes up while the market is crashing, but guess what? It filled the gap right here, this gap right here, and then went down. It could possibly form a support line on this 61.8, which is 216. Currently, it's going to act as a resistance, but once it goes above 216 and holds above this cloud, you're looking at a move possibly towards 250. Okay, look how precise our box was on the daily, right? Now, the way we can do another extension is at the very end of this ABC, the previous ABC, right? We can go ahead and do this. And look at that bounce right at the bottom of the cloud. Perfection. So you're looking at 243 to 255. I said possible to 250. That would be somewhere in the middle. But I would say that you would probably, in this gap right here of 243, 255, that's where I'm looking. My only condition and my only concern is this for Boeing. It needs to break above 225. It will probably get there, come back. So this will, I'll tell you what the scenario that I'm predicting would be like, would be most likely to happen. It'll hold this cloud top. Maybe it'll test the bottom. Maybe it'll test this. Come back, come back, come back, and then go, right? That's one scenario. The second scenario is that it will not pull back to the bottom of the cloud, but it would go like this and get a support. If and if, so it's going to try a couple times. You see this gap right here, right? So it's going to try this, and it did twice here, and it didn't work. So it's going to try again. And if this becomes a huge resistance, then you're going to fall back and get a support at $202. Because most likely this 100-day moving average will be around there by the time it gets there. And again, this all depends if Corona doesn't spike up and blah, 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 right? The travel's open, and so forth. Earnings are nasty. And it has been, but it's like we know that it, we have low expectations, so that's good. I would rather like this scenario, okay? Come back down, get a support, get a support, get a support, get a support. You see where I'm going at? Lower highs, double bottom, and then move up. If you directly move up and try this and fail, you're going to hit down. So you want to do it slowly. And the only reason cruise sector is going up is because, again, tech has been bloated, and then they had an excuse of, okay, less coronavirus cases, then air travel stocks are going to open up. But then Carnival Cruise take a big advantage of it. They're selling billions of shares, and they have to. I mean, how do you maintain everything, all the employees? The ships haven't been on cruise forever. So I don't blame them. But if you try to go up immediately, you're going to crash down. And then you're going to probably form a falling wedge and break out. So these are all the scenarios. Then you'll have that A, B, C, bam, right? And you'll have that W, the long-term W, flag, and then go even higher. So I like to see some scenarios right now. If you're trying to get into Boeing, I will say accumulate it and do fractionally. What I want to see from Boeing is this. You see this W, right? W forming. If it goes down, and that's what I want, and then go up, flag, then go up. So that's where I'm coming with that 250 in the longer term. But I want to see this higher low, double bottom, dragon formation, the W, flag, and move up. That's where I'm looking at Boeing, and that's where my imagination goes. So I might be dead wrong, but usually these are the formations that I like, and that's where you should watch. Don't think like Boeing is just going to shoot up. It's a big company. It's a slow stock. I mean, like it doesn't just move up. You look at this, kills your patience, and it just failed rising wedge, and bam, and then it just shoots up. So if you lose this line right here, it's probably going to get to 50%, and it's going to get close to the previous bottom, but higher than that. So then you'll get a double bottom and then move up and then form this huge W, which is extremely bullish if it gets to 250 and flags. Okay, that's my Boeing scenario, and I took a long time to explain it. So I hope you understand where I'm getting at when I tell you prices for a long term. When I say 250, I'm not talking about 2-3 weeks. I'm talking about months, just so that you get a very strong bullish formation in the long term, so that the chart looks really healthy. Okay. Next up is BLNK on our list. BLNK has been beaten down because of Tesla and all the EV sectors. NIO, everything is getting beaten down. Now, MACD is, you want this MACD to curl upwards, so it's not there yet. Stochastics is taking its time. You can easily draw a trend line. I think that this is the thing. This is the story. Once Tesla was included in SPY, I was kind of fearing, because Tesla is already peaking out. A lot of people might, say no. This is what I look at. When the analyst, I call them analysts, not analysts. When the analyst says Tesla, and this is the pre-split price, Tesla will be $40. Tesla was 300. They kept dropping it. That's when you buy. When the analysts start giving, when Tesla's 900, and then they kept going, oh, Tesla's at 920, it'll be 100 and 1100, 1200, 1300. That's when you sell. That's when you run away. That's the biggest indicator of a stock collapsing. Okay, so that's what I'm getting at. Tesla had been giving up ratings. It's 920. And it already peaked at Kathy's price, and that's where I was scared, because it hit her target. She's going to start selling. Now, of course, she's buying it $300 cheaper from here, but that's what you want to look at. You want to look at Tesla's reversal, the EV sector reversal, for BLNK to go up. Now, the volume is lightly on the sell side, so which is good. Heavy institutional buying on here. Of course, the volume is going to be higher because the price is lower. So I don't know the average, right? I need to actually apply average on the lower study of volume in order to understand, like, maybe the 200-day, 100-day moving average on the volume itself. But as I see it, is worst case scenario getting a double bottom here around 33, but my target hasn't changed. So my target is going to be top of the cloud, but the moving day average is, the 9-day moving average is going to be your first resistance sitting at 42.85. And it did act as a resistance, right? And we told you that. When we drew this bottom, remember we drew this bottom, and look at my last video, the 2 days before, because I didn't do the video yesterday. As I told you in the beginning of the video, I was renovating my basement. I had to do a lot of work. So there you go. So it hit our target, and we're always hitting these extensions, not a surprise. Now it's coming back, totally normal, okay? And you want to break above this 9-day moving average and this 61.8, so the previous highs, sit at 42.85. That's your first target, 42.85, okay? And remember, I drew this red line and I said if we break below that, how loose you're going to hit the bottom of the cloud or the 100-day moving average, which it had. It had hit the cloud and it bounced. So I'm going to go ahead and delete this red line, okay? So then my next target, first thing first, cloud top, 45. So let's go ahead and draw what's going to happen, or what I think is going to happen, okay? So that I can show you guys, and I have enough energy because I didn't record video, so I'm going to take some time recording this video. You can draw this, okay? Worst comes to worst, bam, bam, breakout, okay? That's one move. Second move. But again, it's all given about Tesla, right? What Tesla does. Because the whole EV sector is dependent on the the fact that Tesla goes up or down. You can look at the moves of Tesla. You could probably say that the top of NIO is probably the top where Tesla was. So you can make that correlation yourself. Not hard. I'm worried about this, and I've told you that a million times. I'm worried about the rounding top. So what I think is going to happen, second scenario, we're going to move up, touch the cloud, get a base support, and then we're going to move a rounding bottom. And then eventually hit my target at 49.28. I'm not saying it's going to happen tomorrow. Now, market is crazy. We dropped so much in 2 weeks. 2 weeks ago when we were at 60, if you told me that stock is going to be 33, almost half the price, I wouldn't have believed it. And you can draw this thin line as well and say we could break out and go nuts and hit it. Possible. It is possible. It's just that I'm always conservative and I always like to see formations on certain bottoms. We want to form a bottom, okay? And I most likely rather see this go up, hit the cloud top, come back, get the 50% Fibonacci bounce, come back, get the 60% Fibonacci bounce, and then hit the cloud top. So 49 to 51, somewhere around 51 should be your price target. And then this will look like a W and a flag and a breakout to test the previous high at $60. You have to watch this formation, okay? So if you have BLNK, again, all I'm doing is just drawing possible scenarios, and most of the time these scenarios do happen. That's why I'm drawing them. So my prediction on NIO, or BLNK, not NIO, sorry. First scenario, hits the bottom of the cloud, comes back, gets a support, goes here, comes back, and eventually goes and flags. Okay, that's one. Number two, BLNK never tests the cloud bottom of the cloud. It goes directly up, hits the cloud top, comes back to get a support at this 61.8 and 50 channels, gets a cloud bounce bottom, and runs up. So what will this form? This will form a complicated W, okay? And it will run, and it'll hit this 100% for sure. So my short-term target is 49.28, and then the $60 range. That's where you're gonna flag and go up. Given that Tesla goes bullish, given that market reverses, those are all other factors you can conclude. Okay, and this bottom is holding. You see this bottom right here? You see this bottom right here? It needs to hold. Okay, you see this top, bottom right here? That 100-day moving average is possible. Again, these are all scenarios, but I like to look at stocks always bullish, but I always like to give the bearish scenario that you could come and test that 100-day moving average. Okay, but this is the possible scenario. You're going to go up, first test this level, the 20-day moving, the 50-day moving average, and then bounce back, come back up to 49.28, bounce back, and then go all the way up to 60. Given that Tesla and EV sector goes up, that's my only condition, okay? And this level is very critical because if you draw the rounding top, it ends up with the next line. So it's going to hit 49 to retest that rounding bottom, and it might come down, so you have to watch out for that. My first selling point would be 49.28. Okay. Next up is Beyond Meat. Actually, I'm honestly surprised that Beyond Meat hasn't really gotten hurt as much as I thought it would. Now, yeah, the 9-day moving average had been a resistance, the 20-day almost. I like to see a rounding bottom on this one before I can say anything, but you can say that, yeah, there's a, you can draw this, okay? Okay, these are all channels that you could foresee. Now what I like to do is, let me delete this extension. It's not valid anymore. We can do, what we can do is do a we can do a retracement. All right, so I now got a better understanding of the chart. Let's take a picture of it, and I'll tell you the possible scenarios. By the way, this is beyond meat, so let me go ahead and write the symbol. Okay. So what's happening here is that it looks bearish because it went under the 61.8 retracement, but it got a strong support at the cloud top. Now it's sitting, so this will be a level you're gonna watch. So from here to here, whatever this level is. Okay, let's take a look at it. It is 142 to 154, 155. So let's say 145 to 155. That $10 range is very critical. As long as you break above the 61.8, I see this coming at a strong resistance point at 50% Fibonacci level. So my target would be 167 conservatively. If you want the bullish scenario or the bullish extension, I can easily draw that, which is no issue for me. Giving that this is the bottom. And why didn't I do this? Let me go ahead and okay, that is 100. Yeah, we don't want the 100 on the retracement. So I'm going to save this as default. Okay. So what I'm looking for is if this runs and it's a bullish scenario, and the cost of meat has been tremendously going up, and it's like inflation, right? I'm not so if Beyond Meat can cut up their prices, I see people, going towards the meatless meat, I guess, or whatever you want to call it, right? Vegetarian meat, whatever, right? So what you're going to do is first you want to go ahead, and this will be a scenario. It'll go ahead and test 167. First of all, it needs to break above 154, then 167. It'll probably struggle around because this is a strong resistance, okay? Your 167 area is a strong resistance. If you can manage to break above that, then yeah, you're going to hit 192, 205. Those are my two goals. But I also have to give you the bearish scenario is that you could also come down towards 132, so you have to get ready for that. I would be neutral for this stock because I don't get like a strong bearish or bullish signals on this. Yeah, the stochastics and RSI is curling up. MACD is not finished yet, so you do want to be very strong and stay within this channel of 50% and 61.8% retracement and get momentum within 2-3 days, not weeks, 2-3 days, because if you take time, this cloud bottom is going to be a strong resistance. And that's 167.6. Don't forget that. So 167. 167 is a very strong resistance. You need to break above that for this bullish scenario to happen, okay? So that's all with Beyond Meat. Corsair, we need to hit the gas. Wow, I haven't even covered half of the stocks and I'm 53 minutes. So Corsair, 100-day moving average support, and let's zoom in a little bit. I like the stock and the company and their products. So no doubt about the company and the the legitimacy of the company, no doubt. Okay, it's a real company, it's a real business, and it's a business that runs good. That's for sure. If I see a Corsair product, I always, I don't think about the quality of it when it's like Apple, you're buying an Apple product, you know that the quality is going to be there. As long as, so I'm going to draw a couple levels here, not a fib level, but that's one, okay? That's two. That's three, okay? So I drew 3 lines. I'm going to zoom in. And these are like where the candle supports are. So it's not Fibonacci levels, it's candle supports. MACD is definitely going to take its time. It's not ready at all. Stochastics, not ready at all. You see this top, it's like, and then RSI is not ready yet as well. You see this trend. So if you see this trend line getting broken out, then yeah, the recovery is starting, so you can slowly get in. Or if you have it, I don't know, you can do sell covered calls. I don't know if the call option volumes or any option volume on this stock has volume. You can try to sell covered calls and buy and average your stock. I don't know. I mean, I don't want to give you ideas, like that's your own risk. But I see the major support at 34.14, 34, around there, right? The 100-day moving average. Issue is, I don't see momentum. I don't see the internals reversing yet. This was our favorite, right? This stock was our favorite, and we had this, buy the bottom of the channel, sell, buy the bottom, sell the top, buy the bottom, sell the top. We had that for a while. The issue is we're below that channel. For me to get bullish on this, and it has to happen this couple days or next couple weeks, we need to get back in this channel, this orange line channel. Okay. So we need to get back in this channel and maintain that channel. So that is my condition. We can delete this extension. I can surely draw. I have to zoom out first. Let's see if this is going to work. I doubt it. I doubt it if it's going to work. And it did. Okay. I have to zoom in a little bit, fix, or maybe I don't have to fix. Okay. So it did. This extension does work. Not bad, huh? High is 49.6. So the bottom held perfectly, that 100% extension. So you're going to have to look at, let me delete that too. You're going to have to look at to see if this level holds. If it doesn't, then you're going to drop down to 34. If it holds, you have to go inside the cloud and inside this orange channel, which is around 38. So if you finish and close about 38, I'll be bullish for sure. But because of these bottom candles right here, you are holding that level. You closed right on that level, but you weren't able to get in the cloud. That's not a good sign. That's not a bad sign yet. But the break out of this wedge is going to be awesome. Ultimate goal on this is 46, but let's get back in the cloud and the channel. Okay. All right. Next up is DocuSign. Not bad. It actually held the bottom of the cloud. You don't want to lose that bottom of the cloud. That's for sure. And then let's go ahead and assume that this is a double bottom. I mean, I don't like to assume it because the second bottom is lower. But you're looking at a cloud top. So conservatively, your first target should be 245. And I can draw the bearish extension. Okay. So you're looking at a bearish extension. Your support is going to be 210. Okay. So your support is 210. Next upside is 245. So those are your levels. Of course, it has some type of channel here. If I can manage, why is it not finally? Okay. Just like Corsair, it managed to go below that channel. So you want to get back in, and your ultimate goal, if it does recover in time, should be 304. But I can't say 304 yet because of two reasons. First of all, MACD stochastic's not ready for any reversal yet. Second, you need to go above the cloud in order for that to happen. In that case, remember our first target, 245, it needs to go above that. Okay, it needs to go above this cloud. That's all I'm going to say. So your target should be 245 and your bear side scenario is 210. Next up is FTFT. Future FinTech Group. Not sure if this is a ETF or I'm sorry for not knowing all these stuffs because I can't know every single ticker, right? So what I'm going to do is I'm going to pull up Chartmail. It's working a little slow. And what does Chartmail say? Operates as a holding company, engages in production of sales of fruit juice, concentrates. I was totally wrong. Even though it says future fintech, I have no clue. Fruit beverages, fruit-related product. Company operating segments consist of concentrated apple juice, blah, 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 fresh fruits, vegetables. Futurely known as Sky People Fruit Juice, headquarters in China. Honestly, again, every time I'm being asked Asian Chinese companies, unless it's Baidu or Baba, maybe like there are other great companies, but it's like I don't know these companies, right? So if the future, if this is the thing, if schools open, right? And I'm guessing like they sell, apple juice and fruits and stuff in America. I don't know in America we allow, foreign countries to bid and win contracts over, state-sponsored schools, which I doubt that's the scenario because I'd rather have American companies feeding our kids an American product and help, help the local farmers. So I doubt that they'll they'll allow Asian companies to go ahead and feed our kids. No offense, but helping the, local farmers would make much better sense. Okay. The support could be the 50-day moving average at 503. You need to check this channel out. And it could go as low as the 100-day moving average if it plays in this wedge. If it breaks out, you see how this extension played out perfectly, right? I can tell you where the downtrend extension could be. It lost the 61.8. I think the upside is going to be 633. The downside, you're looking at the 100 fib, which is the very, very edge of the falling wedge that I drew. Is it a coincidence? I don't know. Right? So that's what you have to look at. I don't see any near future or any bullish signs yet. As long as the MACD and stochastics are curling up, then that's when you will see the recovery. Your resistance is going to be 633. Your support is going to be 507 and 507 and 357. Resistance 633 and 718. Okay. Next up is FUBO. I am in FUBO. I didn't sell. One thing for sure, I changed my chart so many times, right? So let's go ahead and delete this yellow box. The 50% and the 61.8 retracement on the downside is working tremendously. So we held like a champ again today. We held that 3350 levels, which is a good sign, which coincides with the bottom of this candle as well, which is pretty good. Now, I don't like the fact that 9-day moving average is going towards and about to cross over the 50, which is like a nail in the coffin type of thing. Worst case scenario, we could go down as $30, and that could be after the earnings. So after earnings, let's say next week, earnings are declared, we could fall and get a support at the 100-day, okay? And which we have not for such a long time. Everybody knows. So what scares me is that everybody knows the earnings, the numbers are going to be good as far as subscription numbers go. But then again, the issue is, what is their perspective on the future? This could be an ABC pattern. I can draw an extension on that. Upside is 47 to 50. So after earnings, we could possibly see 47, 50, or 50. Okay. My long-term target has not changed. It's 76, 78, around there. Okay. Bottoms downside is going to be 28.99. Worst case 18.58. Speaking technically, guys, I'm not saying that it's going to go there. If I did think that it's going to go to $18, why the heck would I own the shares? So that's one thing. But this is a huge pennant. Breaking out of this is going to be tremendous. Only issue comes is that let me see what this was, 757.47. So only issue is that we have the earnings and we don't know what the earnings are going to be like. That is the only issue. As far as this extension goes, we held like a champ. The upside resistance is 37.92. And if you look at it, we were over $40 a couple of days ago. So why not retest 37 next Tuesday? And we'll see what happens from there. But overall, it's hard to say anything at this point because of earnings. And then the MACD needs time. It's not ready yet. And then stochastics did curl up, now coming back down. So obviously it's not, internals are not ready. The good side is that when we got this sell-off, we didn't see too much volume. That's the only good side. Institutions have gotten in right around here. I don't know if they sold it around $60, but I know that they declared somewhere around here. I think like on the December 31st, they declared that a bunch of institutions got in. Either they got in here or they got in on the news and they're trapped. So one side of the story is that if institutions got in on this run, and that's why we went up, then they're down underwater, so they want to make sure and boost this back to all-time highs. If the institutions got in here or gotten in here, then we don't know what they're going to do. So we have to wait on that. Earnings, when earnings are near future, it's very hard to do technicals, guys. I could say that it's going to go to $18 and it could go to like $100. We haven't seen too much on the, besides Moderna, it actually went up pretty good. Even Nvidia had pretty good numbers, historical good numbers, but it's like they went down 8%. So it's hard to say anything for earnings. I'm just going to wait my time on earnings. My short-term goal is going to be $47 to $50. Okay. Next up is GMBL, Esports Entertainment. Now let's go ahead and take a look at the description on this. Again, I'm going to go ahead and read some of the descriptions. I'm saying I think it's gamble. I mean, if it says gamble, I'm guessing that it'll... Is this a new merger? Because I'm seeing the W on it. So it's is it off of a spec? I don't know. Malta. Anybody knows where Malta is? It's in Europe. Birkir Kara. Kara means like dark. Okay. So I would say sports wagering, 18 and 18 gaming. I don't know what 18 gaming is. Maybe like age gaming above 18 years old. I don't know. So obviously it's a wagering company. I don't know where they're operating in obviously Europe. I can show you where Malta is. It's an island, I think. It's an island. It's an offshore island. It's a beautiful island, by the way, off of right underneath Italy, underneath Sicily. Catania, this little, island, Palermo. I love it. I love the Italian culture. We're pretty close. I'm Turkish native, so all things apart, Albania, Greece, Macedonia, Bulgaria, Turkey, from right here. So all of these, Mediterranean countries are more or less the same. Um, Bosnia, Croatia, we all have the same temper, same food. We call the same food, with almost the same name. So you're gonna have everybody claim, no, it's mine, no, it's mine. They all grow olives. They all grow, nice tomatoes, cheese, yogurt, desserts. It's wines. Beautiful countries. Anywhere you go here. Anyhow, Malta is a small island and it's based off of Malta. But the issue is this, and it's based off of the city actually. Um, Central region. Okay. So what we're gonna do is I will say that it's an offshore. So I don't know if they operate in operating in America. So I don't have that knowledge. I don't know how their business is. I don't know if they're competitive to, Penn or DraftKings or something. So although it looks like it's on a bearish crossover on the MACD, the chart looks like it's bullish. The chart, I want to say, it looks bullish. As long as you're in this pennant, you're fine. Chart looks bullish. Now, if I need to tell you where it could possibly go, your first resistance is 20, 21, and then 26 should be your goal. Your ultimate bullish scenario is 34.93. Again, I don't know the company a lot. Even where they're operating is Malta in Europe, right near Italy. I don't know if they have a business in US or just only European gaming. Um, Sports right now, it's a hot thing. Everybody's bored to death. They can't attend anywhere, so they're probably gambling off of sports instead of going to the stadium. But the bullish it's a bullish chart as long as it maintains within this pennant. Okay. Next up is gold. So what I'm gonna do, I'm gonna actually look at the gold futures. So you can look at one thing, right? You can look at GLD, or you can look at GC. Okay, gold futures. Was it called GC? Yeah, gold futures, GC. So unfortunately, remember it bounced off of these two fibs. It lost it. Gold looks bearish unless and unless it reclaims 1762. I was bullish on it when I saw this bounce off of the fib line. Now I'm not. I changed my mind because of technical reasons. Where I could see this going is one place only. Right here. 1700. That's where gold is heading according to previous support. You see this resistance? It was acting as a support. Now it lost it. It's going to go to the next resistance, which was the top here at 1700. I don't know what it is with gold. Maybe like the yields, right? Instead of people going into gold, they went into yields. I'm not sure what the reason behind is on this gold falling down. But you're looking at these two levels, 1700 and 1670s. Okay. Unfortunately, this looks bearish. When you break out or below the certain support line, then you're going to go to the next one. So, and you can draw another. Okay. It could possibly go even lower, but you want to watch this chart. Okay. Now, when you say gold, I'm not sure if you're talking about gold as in gold futures, the actual gold, or you're talking about the GLD. If you next time give me the ticker, then I would be more precise. So I'm going to delete this extension because it's not valid anymore. Okay. Lost the cloud, lost the fib support. it looks bearish. Next up is H bar. I don't know what this is, and it couldn't find it. Did I write this right? I'm going to take a look at the request tweet again. Yeah, it literally says H bar. So it says H bar. Whoever sent me this, H bar BQ to the moon, and I'm sorry. I don't know if this is a coin. Is this a coin? I don't know. You have to specify it. I know you're giving me pictures and promoting H bar, but what I could do is maybe try. It's not even coming up on TradingView, so I'm sorry. I can't. I I can't do H bar because it's not coming up. I don't know what that is. So I'm just gonna quickly skip to the next request. So our next request is LAZR. I know this is an actual company. Why is LAZR not coming? Oh, because I spelled it wrong. No wonder. Oh, sorry about that. There you go. Luminar Technologies. Now it looks bearish on one thing. It lost the cloud. It lost this pennant. It couldn't break above the 61.8. Now it's probably traveling to $23. I can draw a wedge here, and we'll take a look at the volume of selling. And this never has like a strong volume anyway, so you have to look at this pennant. If it breaks out, yes. First of all, I think your next resistance is going to be the cloud bottom at $28. But when I see something like this, the bottom is basically this candle right here, or it might fill the gap right here. So you're looking at $25 to $23 range. If it breaks out of this wedge, I can tell you the retracement. You're looking at the cloud top at 34 or maybe around 32. 33, 34 range should be your target, but the formation is invalidated. I don't see the MACD reversal yet. Here you go. MACD is not reversing yet, as you can see. Stochastics is okay. RSI still not in a bullish reversal yet. So unfortunately, the chart doesn't show me any bullish signs yet unless it breaks above this pennant and goes within the cloud. Okay. Next up is MGNI. It actually had a pretty good couple days of reversal and then came back down. MACD starting a bearish crossover, stochastics and RSI all. So we need a reversal. Good thing about the company is that it's done with the earnings. So you don't have to worry about the earnings. I can see a formation here. If it decides to draw, okay, this channel. The crossover looks bad, so it's curling down. As this stock needs to hold 46.3. It needs to hold it. You can draw like a shorter time frame wedge like this and like this, okay? But it needs to hold $46.30. If it is able to hold it, then you're looking at $60 again. It basically filled the gap here. It's hard to call on this, right? It might be flagging. It might be doing a flag, but the markets and the growth stocks, like I said, I wasn't treated well with FUBO, given how bad the growth sector did. So We'll see how this goes, but Roku, and this all in the same sector, right? FUBO, Roku, and these, like I know it's in the commercial sector. You want to break out of it. It could be a possible, flag. So again, like I said, you're looking at the $60, but it could go to 62 and 67. These two Fibonacci's are very similar, so I'm just going to keep the old one and tell you that if it holds 46.30, you're looking at $61 area, and your ultimate goal should be 84 by end of year. Next up is NAK, Northern Dynasty Minerals. So gold being down, I don't know how much this is going to get affected. It's on a penny stock status at this point, less than $1. Heavy selling volume here. Maybe, again, I don't know what they're, I mean, obviously they're mineral. I don't know if they're mining company. I think it's flagging. And remember, I keep telling you this. So this stock has it. And maybe if the market recovers, this could be a nice play. Remember, I keep telling you need to have a bottom and you need to break out of it. So you see this rounding bottom and you see this downtrend. This is where you buy, right at that breakout. But I don't like this volume of selling. So I don't know what kind of news happened, but I do think that there's a trend line right here as a support. And I see an upper trend line here. I see this going towards here. So let's figure out where that is. But I love the fact that the rounding bottom has formed. So there's a rounding bottom and the downtrend has been broken. So that line right here is where you want to enter in and take the risk. And it's right where the 20 is, and you're above the cloud as well. Worst thing comes to worst, you're going to test the 100-day moving average, which is sitting at 68 cents. Yeah, I like the formation. I like the breakout. I just don't know what the selling was about today. If you know the company and you know their, products or whatever they're doing and you trust in them, the formation looks correct. The formation looks right. And even on the long-term time frame, you can easily see this rounding bottom formation. Okay, and here you go, the downtrend. So this was the first breakout, and this is the second breakout. I can give you an extension and try to give you targets. You're looking at a range of 99.7, so $1 to 108, and then your ultimate goal should be $1.80 in the long term. Okay, but I like the fact that it broke above the cloud, got a confirmation, and then also broke this, wedge. And I mean, it could retest the cloud top, that's fine, but ultimately, I like the risk reward factor on this one. Next up is NIO. And we kind of reviewed BLNK. We haven't reviewed Tesla, but they're all in the same sector, right? So NIO, let's take a look. So the chart didn't change. So there is no new bottom. The MACD is still curling or going down, but it needs to curl. So as long as this blue line reverses and bottoms out, does a smooth, rounding bottom, then you can try to see what happens. But sometimes these rounding bottoms on the blue line can go bad. Okay, so that's one thing. MACD is not ready. Stochastics, it looked like it was going to reverse, but it went down. I like the fact that chart got a support at the 100-day moving average twice. That's one, you have a VIX. Two, it finished right on it. It needs to break above the cloud at 52.96. Your first target should be around 54. The next target should be 57. I don't see any reversals yet off of this chart. I've been bullish on NIO for so long. As long as NIO holds $39, then you're good. If it loses 39, then it is not going to look good. Or we can go as low as, 38.84. I'm just going to go flat at 39. Okay. You need to hold this red line. Your next bounce is going to be to 54. However, of course, on the moving day averages and the internals, they don't look great. And the EV sector is on a bearish side right now with Tesla. Tesla is hurting also SPY as well. Um, we'll see what happens. We'll see what happens. But right now, my first target on NIO is unfortunately $54, where my long-term target is 82. But in order for it to go to 82, it needs to reverse, and it needs to reverse immediately and get back in the cloud. Okay. Next up is overstock. I like the possibility on this, but the internals are telling me it's not ready yet. So you're looking at a huge squeeze here. Okay. You can even make this upper channel a little different. Okay, something like this. It'll meet up. And you can also go like this. And like this, okay? So it depends. If this holds, it holds. If it doesn't, it's gonna go to 58. And the drop is really painful. I mean, going from $110 to 68, that's painful. And if you had margin, and this is the thing about earnings, right? That's why I'm saying, like, sometimes if you get a good earning or bad earning, like, you can't really decide. Earnings haven't been in play for some time now. But we were spot on with our prediction of the box right here at 110. Now, if you want me to say you're so perfect at guessing the top, can you tell us the bottom? Let's go ahead and do that. My prediction on the bottom. Let me zoom out and see what I can do. And this could be a wild guess, so I'm gonna try to do the longer time frame and the yeah, there you go. So this is the issue. You've lost, and it seems like at the first day on the earnings, it bounced right off of the 50 extension, but this time it lost the 100-day moving average and the 50% fib extension. It looks like it wants to go to 61.9 or 61.59. I'm sorry, but it is what it is. But that's what the technicals say. But there is a squeeze. So if you know a lot of selling, volume is drying up. If you're if you're gonna bounce, it'll probably bounce towards $79. Now the next stock is SOS. I don't know this company, so I'm gonna go ahead and see what they do. Limited holding company providing marketing data technology solutions to emergency rescue services, principally in China. So again, when I see the name China, you have to do your own due diligence and see if the company is legitimate. Okay. The company provides services to corporate and individual members through its operating subsidiary, SOS Information Technology, blah, 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 blah. Okay. So one thing that I'm going to do is life rescue, right? Is this kind of like an ambulance service, or because I could see like, Chinese, like, started the corona. I don't know if they're profiting off of like collecting, people from the streets or from their home getting sick. The issue here is that it's a state operated company, most likely. I mean, there's no private companies. I don't know the concept anymore if China changed, if they're applying like pure communism or not. But rather or not, I mean, if state says something, they better do it. So you're looking at this wedge, and it could go down as far as 376. You don't have much risk downside as long as the most downside I see is 269. Um, it's hard to call the upside here, but we have to assume things, right? So I can say that assuming that this was the bottom, you're looking at the cloud top area, which is $9.81. It's very difficult to do because I don't have much information on the chart itself. Like if you look at the company, right? Look at 3 years. It's going to go back as far as 2018. And it's been like a flatlined company, until it broke off of the weekly cloud, which is positive. If you did your own due diligence and you believe in the company, I think the bottom is $4.05 according to the weekly chart, because that's where it found the support at the 9-day moving average, as you can see. 90 moving average 416, it touched it and it went up, so it touched it and it went up and closed around 473. So what is it, 477? So I like that it broke off of the cloud, came back to retest it, 9-day moving average. You're gonna look at $10, $11 area if it reverses. If it doesn't, it doesn't. It's again an offshore company, Asian Chinese company, so it's hard to know their book. I don't know if they're operating or cooking their books. I don't know if they're legitimate business. That's when you do your due diligence. So I can't really say anything about that. As far as the internals go, though, they're bearish. The weekly chart looks bullish. The daily chart looks bearish, but the bearish risk side to it, it's pretty much done. Like the most damage you're gonna see is from 470. You're probably gonna hold this $3.72 area. Okay. Next up is Workhorse, and Workhorse has been behaving like the contract was canceled. That was the risk that everybody was carrying. But look at this beauty. I drew this extension some time ago and I gave the target. As soon as it touched our target, it was done. And then of course, once you're done and then the news come out and the market crash and then the news made it worse. Yeah, there was a dead cat bounce towards 19. That was a huge thing actually, from $12 to 19. That's huge, huge money. And the earnings was, when was it? Oh, it's not even there yet. So the earnings, I don't know what's going to happen. Are they going to tell people, okay, we lost the contract, but we have, some other contract we're working on and so forth? Huge buy volume. But again, when you compare the volume, the higher the price, the lower the volume is going to be, obviously. So the lower the price. I guess institutionals, I don't know if Kathy bought in. That's what I've heard. I didn't check the actual ARC report on it. But here you go. You can draw something like this. Okay. I don't want to draw the ups. I mean, like there is no. I don't know how I would do that, but yeah, this would be it. Okay. So you're looking at an downside towards $12. I think that's pretty much the base of it. And notice what the bottom of this cloud is and what it held. So I'm going to draw a line, right? You guys think like these clouds are jokes. It's not something to be taken seriously. Think again. Look at this line of the cloud, which is a good sign of a support, and look where it bounced off. Okay, perfect to the cent. So now what I'm expecting is that cloud to hold, the line that we draw off of the cloud bottom should hold around $12. Your upside should be around $23. Long-term target, you should fill the gap around $30. But there's no way for me to say that at this point. This was a perfect call, by the way. Look at the top. It's a beauty. I'm saddened to delete it, but we always do these kinds of things, and you're aware of it, and I guess that's why you're watching our channel. Assuming that this is the bottom, you're looking at the cloud top, as we said, the cloud top, and right here should be your first target. 24, I said like 23 something, right? Without drawing the extension. So 24, 29, 27 should be your first target. But then again, I don't know when it will get there. I don't know the fundamentals of the company. They were pretty much hurt, and the federal contract with the USPS got canceled, I think. And that's where, the whole the company was about that. People were waiting for that. So fundamentally, things went wrong. I don't know technically how it would get corrected. But if it did, you're looking at your first target as 24.29. Next up is ZI. Now, I've heard of this company, ZoomInfo Technologies. This is not the Zoom like video conference company that you're thinking of. I'm gonna go ahead and bring up their portfolio, not portfolio, but portfolio. Let's go ahead and see what they're doing. ZoomInfo Technologies operates cloud-based intelligence platform for information and insights on the organization and professionals principally in the United States and internationally. ZoomInfo Technologies Inc. is based off of Washington, United States. I love the fact that they're based off of Washington, The company headquarters, I don't know why it says Vancouver. Is this Washington, WA Washington, Vancouver, not Canada? So I wanted to make sure because it's based off of Washington State, not DC, okay? So that's good. Good to know that it's American business. Always support American business. Next up is, of course, is cloud-based. So cloud-based is hot, right? I work with cloud. That's one thing. And I know it's the future, and it's actually not the future. It is. We are on cloud, basically. It's not the future anymore. We're using it. So possible bounce off of $49, worst case, and you're looking at your resistance at 53. The chart doesn't look bad, surprisingly. I don't know if it didn't get that, well, it did if you look at it here, 58 to 49. So you're looking at $10 off of 50. So $10 of 59. You're looking at 16, 17% drop. Not bad compared to other stocks, but I mean, you get hurt, you get hurt. I'm going to do a rough, I'm sorry, what the hell I was doing? It's like, why isn't this Fibonacci retracement working? I mean, I guess you can guess. I've been talking for more than half an hour and a half. So that really does get me tired. Yeah, so my resistance at this orange line is spot on. So sometimes I don't, and look at this yellow box, guys. Look where it hit. It hit my yellow box and then went back. So again, I mean, like I said, like at the beginning when I was new and this channel was new, people were laughing. They were like putting like mean comments, aggressive comments about these boxes and, oh, I could do that, blah blah blah. You suck, blah blah blah. And I suck, I admit. I'm not that good. But the issue here is that these boxes have been spot on for some time. So 61.8 extension, even off of the new extension, as you can see this top right here. 59.92 and 57 should be your next target, but then again, your biggest resistance will be 53.91. You have to watch out that level because it is the top of the cloud. Obvious resistance. Your support is going to be the 61.8 extension sitting at 48.48 or the 50-day moving average sitting at $49. Okay, that's all I got to say. It did have earnings, so no dramas anymore, and we'll just see if it'll pick up with the market or not, but I think it will. Your first target should be 53.91, then 57.99, which is $58. That was all for today, guys. It's been hour and 37 minutes, and I've enjoyed doing this video more than any other videos. The reason is because people are in a state of shock. People are in a state of like lost, like they don't know what they're doing at this point. They're like, what's happening in the market? Are we crashing? Are we going to recover? I'm getting millions of messages from my friends, millions of calls, unanswered calls, because I'm working, right? I'm working during the day, and I'm a full-time worker, and I make sure that I actually, do all my hours. Either I start early or sometimes I work till midnight. So having, recording these videos, 2 hours, 2.5 hours, sometimes it takes to, upload it and so forth. And sometimes I get tired because I'm doing my basement, remodeling it. So from next week on, Sunday, I might do another video, but next week on, I think I'm gonna do weekly videos to get a rest, get some rest, and then also finish up my basement because it sucks. My kids can't play in it, and they really want me to rush. So I'm gonna give the daily analysis a break. For a couple of weeks until I, straighten out my house and, do all the construction stuff because I have to do drywalls and then I have to build a whole new room, and it's going to be awesome so that I can actually do screen and camera recording because I'm going to build an awesome trading room with all the lights, the cool lights, and the workstations with the the monitors and everything. So I'm working on a project that's gonna eventually help our channel, and I might have some like cool live background, and you can see my face, ugly face, old face. Um, so joking aside, but yeah, so that's going to be a cool background. I mean, I could project the background on my current camera. It's just that I don't like that, glitchy feeling. Like I move my head and the picture behind me goes glitchy. So hopefully I can provide you guys a realistic room. But that's going to take some time, and that's going to take a lot of time for me. to construct it with my brother-in-law, who is actually a contractor. So he has to come off on his own time. I'm just going to help him out. And that's going to take some time. So my guess is that from next 3 weeks to 4 weeks, I might just do weekly reviews so that at nighttime, actually I can dedicate my kids my time from 5 to 8, I put them to sleep, and then from 9 to midnight or late midnight, I can work on the basement and hopefully build a nice room for office and also trading room, and it's going to be off the hook, guys. So thank you for sparing your time. It's been hour and 40 minutes. I enjoyed doing the video. I hope you enjoyed watching it. If you did like it, just go ahead and give us a like and also comment out to help the channel to promote in YouTube. And also subscribe if you haven't subscribed. So thank you for listening and have a nice day.